Have you ever felt that nagging suspicion that the global economy is balanced on a knife's edge? That the system we've trusted for decades is starting to show some serious cracks? Well, you're not wrong. Right now, we're staring down the barrel of a $318 trillion global debt bomb. That's a number so massive, it's hard to even comprehend. To put it in perspective, that's more than 3 times the entire world's economic output. For years, we've been kicking this can down the road, printing more money and piling on more debt. But the party has to end sometime, and when it does, the fallout could be catastrophic. Now, imagine a world where your savings could be wiped out overnight, where the value of your currency plummets, and your financial freedom is stripped away. This isn't a scene from a dystopian movie. It's a potential reality that some of the world's most powerful nations are actively preparing for. And at the heart of this massive shift is China. They're not just waiting for the system to collapse. They're building a new one from the ground up, centered around their revolutionary digital yuan. This isn't just a new form of payment. It's a direct challenge to the US dollar's global dominance, a move that could fundamentally rewrite the rules of international finance. What does this mean for you? For your investments, your retirement, your family's future? The mainstream media is barely touching this story, but the implications are staggering. We're talking about a potential reset of the global financial order, the biggest one in our lifetimes. So, if you've been thinking about selling off your assets and running for the hills, hold on. Panicking is the worst thing you can do right now. The smart money isn't running. It's repositioning. In this video, we're going to pull back the curtain on this $318 trillion debt crisis. We'll explore exactly what China's digital yuan is, how it works, and why it's a game. Most importantly, we'll discuss what you need to do to not just survive this economic earthquake, but potentially thrive in the new world that emerges. Stay with me, because what you learn today could be the most important financial information you hear all year. Let's start with the big, scary number. $318 trillion. Where did all this debt come from? For decades, governments, corporations, and individuals have been borrowing like there is no tomorrow. Governments borrow to fund social programs, infrastructure, and unfortunately, wars, without raising taxes. Corporations borrow to expand and buy back their own stock, boosting share prices. And we, the people, borrow for homes, cars, and education. It all seemed fine when interest rates were near zero. Borrowing was cheap, and the economy kept chugging along. But here's the problem. That debt never went away. It just got bigger and bigger. Now, with inflation forcing central banks to raise interest rates, the cost of servicing that massive debt pile is skyrocketing. It's like a homeowner whose adjustable rate mortgage just reset to a much higher rate. Suddenly, the payments are unmanageable. This is the debt trap. Countries are now facing a brutal choice. Either default on their debts, which would trigger a global financial crisis, or impose crippling austerity measures on their citizens, leading to social unrest and economic stagnation. Or they can try option 3. Print even more money to pay off the old debt. This is what's known as inflating away the debt. The problem is, this devalues the currency, making everyone poorer. Your savings buy less. Your salary is worth less. It's a hidden tax on everyone who holds that currency. The US dollar, as the world's reserve currency, has been able to get away with this for a long time. But other countries are starting to get tired of playing this game. They're tired of their own economic fates being tied to the decisions made in Washington. They're looking for an alternative, an escape hatch from the dollar-denominated debt system. And that's where China's digital yuan, the ECNY, enters the picture. So, what exactly is the digital yuan? It's crucial to understand that this is not a cryptocurrency like Bitcoin. Bitcoin is decentralized. No single entity controls it. The digital yuan is the exact opposite. It's a central bank digital currency, or CBDC. This means it's issued and controlled directly by China's central bank, the People's Bank of China. Think of it as the digital version of a physical yuan bill, but with superpowers. Unlike the money in your bank account, which is technically a liability of your commercial bank, the digital yuan is a direct claim on the central bank itself. It's the most direct and secure form of government money possible. And here's where it gets really interesting. Because it's digital, and centrally controlled. The Chinese government has unprecedented power over it. They can track every single transaction in real time. They know who bought, what, where, and when. But it goes even further than that. They have the ability to program the money itself. For example, they could issue stimulus payments that have an expiration date, forcing people to spend them quickly to boost the economy. They could instantly block transactions related to activities they deem undesirable. They could even implement automated tax collection or negative interest rates directly on your holdings. This level of control is both incredibly efficient and, for many in the West, incredibly terrifying. It represents a complete shift in the relationship between a citizen and their money. But why would China go to all this trouble? It's not just about domestic control. It's about global power. For decades, the U.S. has wielded the dollar as a geopolitical weapon. The global financial system runs on a network called SWIFT, which is largely controlled by the U.S. and its allies. If the U.S. wants to punish a country, it can cut them off from SWIFT, effectively crippling their ability to trade internationally. This is what happened to Russia. China has watched this closely and sees its dependence on the dollar system as a major vulnerability. The digital yuan is their way out. By creating a new digital currency and a new payment infrastructure to go with it, China can bypass the dollar-dominated system entirely. They can trade directly with other countries using the digital yuan. This is incredibly appealing to nations that are also wary of U.S. sanctions or simply want more economic independence. Imagine Russia selling oil to China and getting paid instantly in digital yuan, completely outside the reach of the U.S. Treasury. This isn't a future possibility. It's happening now. China is aggressively promoting the digital yuan through its Belt and Road Initiative, signing deals with dozens of countries to use it for trade and investment. Each country that joins this new system is one less country that needs to use the US dollar TC, methodical erosion of the dollar's global dominance. And as demand for the dollar falls, its value could fall with it, bringing that $318 trillion debt problem crashing down on everyone still holding dollars. So, the big question is, what should you do? Seeing this unfold, your first instinct might be to sell everything, bonds, maybe even your house and stuff cash under the mattress. But as we've discussed, holding cash might be one of the riskiest things to do if governments decide to inflate their way out of the debt crisis. So, panic selling is not the answer. What's needed is a calm, strategic pivot. First, you need to understand the concept of hard assets. These are tangible things that have intrinsic value, unlike paper currency, which is based on faith. Historically, the best stores of value during times of currency debasement have been precious metals like gold and silver. They can't be printed out of thin air, and they have a thousands of years long track record as money. Owning some physical gold and silver isn't about getting rich quick. It's about preserving your purchasing power when fiat currencies are failing. It's your financial insurance policy. Second, think about productive assets. This includes things like high-quality, dividend-paying stocks. In essential sectors, people will always need food, energy, and healthcare, regardless of what the currency is doing. Companies that provide these essential goods and services, especially those with low debt and strong international sales, can be a resilient part of your portfolio. Real estate, particularly income-generating properties, can also be a strong hedge. Your tenants pay you rent, which typically rises with inflation, and you own a tangible asset. Third, and this might sound controversial to some, consider a small allocation to decentralized digital assets, like Bitcoin. While China's digital yuan represents the ultimate in centralized control, Bitcoin represents the ultimate in decentralized freedom. It's a global, permissionless, digital asset with a fixed supply. No government can print more of it or stop you from using it. For this reason, many see it as a digital version of gold and a potential escape from the collapsing fiat system and the rise of controlling CBDCs. It's volatile, for sure, but its fundamental value proposition becomes more compelling as government control over money increases. The key is diversification, not just across different stocks and bonds, but across different types of assets. You need assets that are outside the traditional banking and currency system. You need things that can weather the storm of inflation and a potential currency reset. The world is changing rapidly. The era of the US dollar's unquestioned dominance is coming to an end, and the $318 trillion debt bubble is the catalyst. China's digital yuan is not just a technological experiment. It's a direct challenge to the old world order. But this doesn't have to be a disaster for you. By understanding these shifts and strategically positioning your assets, you can protect your wealth and even find opportunities in the chaos. Don't sell in a panic. Instead, get smart, get diversified, and get prepared for the new financial world that is emerging. Thanks for watching. If you found this information valuable, make sure to like, subscribe, and hit that notification bell so you don't want to miss our next deep dive into the forces shaping our world. Stay safe and stay informed.